Hey guys, welcome to another edition of the Crypto Lab with Alex. As usual, we are going to go over a couple of macro themes, especially after the Fed meeting yesterday. And then, of course, we're going to dive into the cryptos. You can leave your comments and requests for some charts. I've seen that you have already a couple of them in the chat box. And after the presentation is done, we're going to go and look at your pairs. So I have a little problem with my screens. One actually dropped dead today, so I will need to do some modifications, but the stream will be as usual. So I will be mostly looking at charts and going through the charts. Of course, if there is any problems, you can leave that in a chat box. So let's start. Let's look the bigger picture, what's going on with Fed. And currently, as you know, the Fed was pretty hawkish yesterday with a very strong message of going back and going after inflation and to actually lower down inflation to their target of 2%. Obviously, I find that a bit contradictory because how big of the demand destruction you need to do if you don't control the supply side. And as we know, the most of the prices that are included into the inflation measuring goes into the energy, and you will have to see energy prices go much lower, in my opinion, to see that 2% actually actualized, or you will need to destroy demand pretty sizably, which means that you need to bring stocks and the other components of the overall economy on the downside that will be pretty damaging. So let's see how that will go for Fed. Announcements of the previous soft landing are now off. Jerome was relatively clear that we might have a little bit more rough landing than a soft one. And that was very clear from the yesterday after the or around the press conference. So let's see what are the market is pricing for the 2nd of November. We will have a new set of data. As I said before, general inflation is moving down. So we have 9.1, 5.8.5, and then 8.3. I think also the next reading which is coming is going to come lower. But actually the Fed is operating with the old data, as someone said on the CNBC. So, but nevertheless, we are seeing their stance, and the market is now pricing another 75 basis point move. And on the 14th of December, the target rate has moved between 4 and 4.25. That is a new target rate, and as we see how the dot plot is standing, which is basically just opinion, the rates are projected to move also potentially with a little bit smaller increments in 2023. So let's see how that will go with the new inflation data that we will get in the meantime. But generally, Fed stays on their path with a very strong hawkish rhetorics or a narrative. And that is, of course, we have seen reaction in cryptos and also in the stock markets moving lower. So I think market still now needs again to reprice this relatively, I will not say unexpected, but a less expected such a strong stance from Fed. So we are going to face for the two next meetings 75 most likely basis point move. Generally, the inflation data which come, I think in between, we will, if we see the lower data, maybe they're going to change something, but for now, their narrative was pretty strong on the upside. So let's look what is going on in a 10-year yields. As we looked at before, this is still moving on the upside, which was a kind of a projection that we have, looking a couple of zones from where this can go into some type of retracement. As I said, technically, if we look also a higher time frame, which is a monthly, we are seeing the extreme RSI reading not seen in the last 40 years. Of course, in this deflationary move down, which has lasted almost for 40 years, this is a pretty big sizable change, and now we can even discuss that this is some type of a higher time frame secular change in inflation, not a cyclical one. We will see how that will go, but for now, from the Elliott Wave perspective, we can see some type of a 5-wave impulsive move on the upside forming, and in one point, I think in this zone, we will go under a corrective process, which can be of a smaller or a bigger altitude to the downside or magnitude to the downside. So you have seen this. This is a typical old technical head and shoulder structure. I don't much use that in my general technicals outlook. But you can see here that after a pullback, we might be faced with another inflationary move on the upside. So this is something to think about, and this is something I try to encompass as a possibility in the future outlooks. That will be pretty heavy during 2024-25 on the upside, but let's go one wave at a time. For now, we are still in the upside movement. I'm still expecting some signs in the next months to see a pullback or signs of a pullback to the downside down to this support level. Some medium level can be around 2.5 or 3. Now we are already trading on a 10-year at 360, and we are still moving on the upside. So my general opinion is that we are going to hold this zone, and in some type of any wave development of the upside, we will see a beginning of this correction and market cool down on inflation, especially if we see the next inflation number moving lower. But of course, that cannot be going down on elevator. It has to go increments in increment size. So I don't expect this to go much below 8% in the next reading, and let's see how the markets will react on that. So if we look in the European front, our assessments that the rates will go on the upside from this pullback was of a nice timing. We labeled that as an intermediary wave 3. As you can see, we are moving impulsively on the upside, and I think that also some corrective pullback will go after which we're going to see a full 5-wave sequence, which also put us in a pretty relatively unfavorable position of inflation going lower, because if we see this trend, which was in the last 40 years, upper channel line provide this smaller resistance on this intermediary wave 3, and if we see a full-blown 5-wave sequence after a pullback, we are going to be facing potential measured move on the upside, which actually also calls for a pretty bigger inflationary problems after this first sequencing is done, and after correction actually makes its way to the downside. So we will also go partially here. I'm just trying to give you the overall picture, but in general, this is still informing, so I don't think this is done. This is pretty sharp vertical rise, which we usually ascribe as a wave 3 of 3, which might be over soon. And after this pullback, we're going to experience potentially one more move on the upside, completing this impulsive wave structure and going and heading down into a corrective pullbacks, which maybe are going to happen somehow or somewhat in 2023. So let's see what's going on with the dollar index, which is obviously moving higher. We are very close to the clustering of the Fib zones. We derived for a couple of measurements between the interrelation of these wave structures. So we have labeled this as a 1, 2, up in 3, 4, and 5. Even if you label this as a corrective pullback or a complex corrective pullback on the upside, you will have some type of an ABC on the upside as W, then you're going to have an X and Y. Even in that case, upon this 5-wave sequence is done, you're going to see a smaller or a bigger pullback to the downside. So I'm carefully observing this zone from 112.80 to 114.55, from where I think looking all of the metrics, also the RSI upper channel line and couple of fib clustering, we should see some type of a weakness in dollar and potentially a bigger move to the downside of I will say modest or a bigger magnitude, and that is left to be seen. On commodity side, our Thomson Reuters chart is functioning pretty nicely. We have labeled this as a completed 5-way move on the upside. We have a impulsive sequence to the downside. We label this as a B wave. Sometimes this can get more complicated, but in general, if we continue down impulsively, we will see that commodity prices might still tick lower, and we label this for now as a corrective process because this is still early to be labeled as a full impulsive move, which might have a bigger implication. But for now, we are seeing this just as a pause. Looking some charts that we have in the net gas and also in oil, and also in some soft commodities, which are in the corrective process as well. And we do think that we're gonna see commodity prices going still lower, I will say significantly from these levels, which might also be a factor of these rates and next CPI readings, and actually produce in the next 6 months to 1 year correction that we are seeking. So let's switch to oil. Not much of a change. Oil, after the new implications of the Russian-Ukrainian conflict, has stalled a little bit around this support. We can relabel that, and that was my case before, that potentially this is a wave 4. We go up, complete intermediary wave 3 pullback, and then a wave 5. I changed that because I think if stocks continue to go lower, most likely we're going to see a lower support. So there is a kind of a bigger, I would say a bigger chance or probability that this will be some type of wave to pull back, and that we are going to see a next energy shock on the upside, which in this new kind of a world setup might actually produce a bigger prices in oil because the geopolitical picture is changing. So we might see oil going above these previous highs. I don't think this is the 5th wave truncation. In that case, if it is, you will see some impulsive movement to the downside forming, and we don't see that in current case. We only see a 3-way move down, which might get a little bit complex down to this 2nd wave, but generally, as long as you don't see decisive kind of this type of moves in any directions, which you can label as a 5 wave, we consider that as a correction until proven differently. And for now, we do consider this to be just of a corrective move in oil with a potential little bit of a complexity, but generally this will be a very visible support level between 65 and 75 if we continue lower after some pullback or directionally lower to the downside. So in the case we need to change this opinion or assessment, we need to see clearly a fully developed 5-way move, and then we will have to label that as an A up in B down in C with the lower levels, but we don't see that for now. So there is no current changes on the chart which we can actually kind of look for another scenario. So I'm going to stick with this, that this is going to produce a bigger correction, and then we're going to start to move further on the upside in this all political and geopolitical turmoil that we are facing in the world. So net gas looks a little bit of a smaller corrective pullback. We don't see here yet a decisive move on the upside above this 1618. I'm still kind of a juggling in this wave 4. Are we going to see a bigger correction lasting more in time? Because of seasonality, we are coming very close to October, November, where the colder weather will start, and we already have problems with the net gas, of course, in Europe. In US, it's a little bit of a different situation, but I will tend to outline this scenario that after this correction is done, we're going to go more directionally towards 14, 15, 57 in the net gas prices, and after that is done, we're going to complete a full 5-wave sequence. As you can see on the chart, we have a wave 1 and 2, and then we have an intermediary wave 3, pretty nicely stopping in this 1618 projection ratio, which is a usual target in statistics when you look the Elliott Wave, third wave development, which is the most common ratio where the wave 3 stops. And we have seen a nice 50% pullback from there, but then we have seen an impulsive development, and that is rising my suspicion that this smaller correction is just a wave 2 pullback. And if you pair that with seasonality, it kind of has its own logic that this is a wave 2 pullback and that we are going to continue on the upside as the demand rise, as the colder weather starts to hit the Western Hemisphere. So let's switch to gold and silver. So we have seen some signs on the gold and silver on a potential lows. Of course, gold doesn't react very nicely with the yields going higher, as you can see. So let's look what is the current development in gold. We are still holding this 200 moving average. I have relabeled a little bit this in a potential ending diagonal in flat. So this 200 moving average equality between these levels, 127 ratio, which we use for a flat, and 50 and 38% retracement, I think creates a nice fib floor. We don't see still a higher time frame confirmation in the upside. So if you look to be long gold, I will wait for the 5-wave development on the upside, challenging this previous swings high. And definitely that will be the sign that potentially the bigger upside movement is beginning. So for now, if we look at the situation on some RSI readings on this weekly chart, we are seeing we are very close to some of the readings which was historically pretty low in gold. And also we don't see gold being very close to any of the wave counting validation, which means that we will have to go below 1,379 to invalidate this thesis that this is the 4th wave development and that we still have one more move on the upside. I'm still going to keep that outlook because this correction in magnitude or in the right look guidance or a guideline corresponds to this potential flat here in wave 2. We are still very in line with this right look guidelines, because now we just touch or a little bit above equality in time spent in a wave 2 and in a wave 4. And regarding the structure, we can easily label this as A up in B, down in C, and C can be in a form of an ending diagonal. So this 200 moving average is holding for now the price. As you can see, the RSI is approaching lower levels on this higher time frame. So I think there is a fair amount of chance that in next couple of weeks, especially if the dollar starts to move lower, we are going to see some type of a higher time frame confirmation that we are going to head higher in gold in the next cycle. So I'm still gonna stay bullish on gold, looking all of these parameters that we usually look in kind of orientation themes and orientation in a general overall chart. So let's look silver. So silver is I think on a verge of confirming a small 5-wave move on the upside. So if we look the wave structure, we still don't have a fully developed 5-wave move. As you can see, we have a wave 1 and 2 up in 3, 4, and 5. So this needs still to prove itself on a smaller time frame to be impulsive. And after a pullback, if we see the higher time frame 5-wave confirmation, that can be a sign that we have a reversal signature. So for now, silver is acting a little bit more on bullish side than gold. We have seen that also in the gold-silver ratio that we have looked in the last couple of crypto labs. So I'm still waiting here for a potential bullish development, and for me to become convinced that actually silver is going to start a larger bullish trend, I need to see a 5-wave move on a larger time frame challenging these previous swing highs, and after a pullback I might be interested in silver on the long side. So like that, you will get probability on your side. Fishing for bottoms is not very efficient way to actually capture some larger trend. If you look the higher time frames, which I always advise people to do so, you will see that you will be much better off, because when you have a 5-wave sequence on the upside, pullback will bring this price a half of this move on the upside, and then your stops and your risk can be very well determined instead of fishing for lows, which might not be the actual lows. So there is something that you can pick up from our pretty big experience with dealing in Elliott Wave. So in trading analysis, we have combined over 45 years combined of Elliott Wave experience. I think there is a couple of things that we can pass, which functions better, I think, for the people which are trading on the lower time frames. So let's switch to cryptos. Let's look what's going on a total crypto market cap. So we are still holding this 38% retracement ratio. We usually derive this ratio to look where the wave 4 might actually go. So for now, the wave count invalidation comes at 390 billion. That is pretty low. It's almost 1.5 size lower that we are currently. Currently, we are trading at 891 billion. Of course, most of that is still Bitcoin, around 360 billion currently. We don't see a break of these levels, so still question is open in this very challenging environment if this is a start of the new uptrend or the wave 4. So we have some type of an impulsive move to the downside, and I think if stock starts to move lower, we might see a break of these levels, just a slight lower towards, let's say, 600, 700 billion in this last 5-wave sequence. And in overall, when you have a 5-wave sequence, you're going to see a big pullback on the upside. So at least we're going to get, after some time, ABC move, if not a full 5-wave move development, which will be, I think, in my opinion, still a bullish development when these conditions potentially change. For now, the situation for that outlook is getting worse, and the probability is less, and I have to agree and admit that. But the overall wave count technically still doesn't suggest that we are going to go more directionally to the downside, breaking this wave count invalidation. The same situation is in Bitcoin, so I'm going to show you, as always, a larger time frame wave count. Let me just find this overall higher time frame. We are still trading below 200 moving average. There is a possibility we go a little bit lower. In this current scenario, my levels are between 15 and 16K. We are holding this last bottom as we are seeing here, which is a natural thing. You can get some bounces back and forth, or even you can get some type of a triangulation before a move on the downside. But I'm still going to continue to track this potential fourth wave. Time relation is still okay if we consider this to be a big flat. So for now, as long as we trade within 2618 time fib ratio between wave 1 and wave 4, we are still okay. If we see this consolidate a little bit longer and we cross this ratio, then we have to reconsider what is going on, at least from that right look guideline perspective. So for now, what I would like to see on a Bitcoin, of course, is the 5 waves up from any of these targets on the downside, and in that case, that will confirm that potentially we are starting a bigger and larger uptrend and going towards the halving with the higher prices. But okay, this still needs to be proved. RSI is still very low, kind of a type of a 5-wave move, and this pullback to this target might also result in a correction here, so pay attention on that. On higher time frames, if we look at the daily, we are trading below significantly of 200 moving average. If you look the daily chart, and it kind of make a sense in this current situation that we stay with the trend. There is no any signs here that we are in a bullish uprise. at least currently. We have looked this as a possibility, but unfortunately it didn't materialize on the upside, challenging this 200 moving average and going above it. So for now, we have to stay with the downtrend, with the current macro environment, and look what's going on, be patient, and actually observe. This is not time to pull a trigger. Even if you pull a trigger on shorts, we might consolidate here, and some of the big longer term holders can protect this level for some time. So be careful here. Any break of this previous low, I think, will just accelerate a further movement to the downside, and on the end we might be facing with some type of an ending diagonal even here on a Bitcoin, and I think at least we're going to have a three-way pullback in the most negative bearish scenario, but if we have a five-way move, that will actually be a very reliable signature that this was actually a low, and after a pullback I think we can continue on the upside. Also, if you look some time horizons, halving is in March of 2024. So there is a couple of reasons also and a couple of metrics. If the things with inflation starts to materialize on the downside and the rate starts to move lower, that will be beneficial for the assets classes, especially risky one. And in that case, this scenario might nicely unfold. So the question is, even if this goes further lower towards these targets, we're going to see some type of a pullback, either in a 3 or in a 5-wave. I prefer still a 5-wave move on the upside, but I mean, that is just my assessment. I'm still going to stay bullish until this wave counting validation has been actually hit. Wave counting validation is at 13.826, and of course we are losing some time as well approaching this 2618. So the situation becomes a little bit more elevated in a sense that we are still going to keep a bullish scenario, but the time is ticking out for this impulsive wave actually to materialize. Let's look Ethereum chart and let's look what is going on there. Ethereum is holding good for now. We are seeing still 200 moving average on weekly to hold on nicely. We have very nicely, I will not say predicted, but that was very visible. We're going to test this 200 moving average, and you can see that on my Twitter page. We are still holding this equality between this ABC, and until this broken on the downside pretty sizably, I'm not gonna stay bearish, although all of the conditions says that, but I prefer to stick to technicals. In the case we do break on the downside, the scenario for the full 5-way move will look like this. Let me just find this. So this will be some type of a scenario towards the region between the 700 and 800. So in that case we will have some type of a 5-way move to the downside, although still this looks like a 3-way move to me. So I'm going to stay towards this scenario. There is a little bit tricky assessment in that, because if you look Bitcoin to move a relatively a couple of grand, a couple of thousands lower, how Ethereum can hold its levels. For that I will need to see some pullback, potentially in Bitcoin on the upside, and on Ether relatively sizably in 5 waves beginning of this relatively higher 3rd wave move. So my conviction will grow on this scenario if I see a 5-wave move challenging this 200 moving average on the day, and then I can build up further with these assessments that we might actually hold this level and continue higher. So for now we wait these signs. We are not having any positions. Currently this was a pretty nice short which was flagged much in advance to our members. So that was unfolded pretty nicely, but as you can see, this still can turn pretty bearish if we have this as a 1-2-1-2 and a pullback and then roll over. So I think you should look from 1,200 to 1,500 levels. If you see just a 3-way move and then reversal to the downside, that will give probability for a more bearish scenario and actual further development in a wave 3 to the downside. So pay attention on that. So let's look a couple of other cryptos. Not much of a news. Cryptos are positive today. We are going to scroll and look a couple of other pairs. XRP is 12% up. Our overall assessment still stays that we are in some type of a triangulation here. Are we going to see a new low or not? That is still debatable. I will still leave this with the possibility for one more push, but in general, we see overall sideways price action, and I labeled that as a triangle because the time relation still fits this sizable correction in the second wave. These data are real, we just don't have them on this crypto compare, so I try to recreate them here in the wave 1. So potentially this is a very sharp move up in a wave 3. So this wave 4 in a wave 3 was very small of a magnitude. It doesn't correspond to this correction, and it was triangle based, which kind of corresponds to this big developments on the upside, and the character of this is obviously a wave 3 development. So usually when you see these sharp moves, some of the counterbalancing force will act and actually produce some type of either a triangle or a complex correction. So I do still consider this as a sideways movement with the possibility of a little bit more sideways price action and turnaround to higher levels when the time is due. So let me look a couple of more, and then we will switch. I have seen a request for a Dogecoin. So let me change this charts and go to the Binance feed. So let me look, what do I have overall on the Dogecoin. So I don't still think we have any sizable signs or any viable signs that the Dogecoin actually is going higher. There is a combination that you can do a little bit of mumbo jumbo, as I call it, and look this as a wave 1, 3, 3, 5 as a wave 2, and then we go up, but we don't have any confirmation for that. All that we see here is a 3 waves up and a 5 waves down, which will rather implicate we have a more downside price action. Okay, just for your orientation, when I will change my mind, so definitely if I see a 5-wave move surpassing and challenging these previous swing highs, that will make me more bullish on Doge, but of course we don't see that for now. So be aware of that. I don't think still it's a time looking this environment to look bullish. And as I said, I'm not a low picker. I'm going to wait comfortably this to show me, and then I can have a control over my risk and overall over my trade. Once as you are trying to pick bottoms without significant, I will say, proofs and significant reversal signatures, you are on a mercy of the markets, and that is not a good situation that you can find yourself in. So I'm going to be patient on this one here. Overall chart relatively looks pretty impulsive to the downside. This might be ABC x ABC, maybe one more push to the downside, so we will look for that. That corresponds to some secondary wave, which I will show you on another package because we don't have it here. So this is still in alignment with the possibility of wave 4, so let's see what will happen here. So let me look also Matic, which is holding pretty nicely. Our assessment on Matic was that we are in some type of a B wave. Okay, so we reached equality exactly here. So I will still stay to be very optimistic on Matic. Because of this, Matic didn't lose much of a strength. As you can see, the RSI on daily, it's coming to the lower level, and on weekly, we already have an impulsive move on the upside. So Matic for now is holding pretty nicely, only 3-wave pullback towards equality. And second wave came in the territory of the previous wave 4. We can squeeze an impulsive move on the upside here. So for now, we have just an ABC, which implies possibility that we might already started a new uptrend. So how we will confirm that? We will confirm that if we see a larger impulsive beginning of the wave 3 and then a pullback, which is usually short in nature, can be a kind of a good risk control place for the further development on the upside. Overall, if I look Matic on the higher time frame, we're still going to stay optimistic on the upside. We didn't develop from here. As you can see, some of the assessment that we are in the bullish development, but overall chart, here I lost my wave count, so I will show it to you here. It still looks pretty bullish to me for now. Okay, so I'm still looking matic to go further on the upside when conditions are there. And of course, until this level holds and proves its intention to continue further on the upside. So let me look some of your requests. I need to do it like this, guys, because my other screen doesn't work, so I apologize for that. So Felix, let's change it up to Doge. Okay, we switched from copper to Doge. Okay, that's fine. I think we looked at Philip. We looked Matic. Lawrence, hi Lawrence. What about Nifty? So that's Indian Stock Exchange. We don't usually look that. I will see if I have time to look that afterwards. Hi William, I hope you're fine. Can you look for GRT? A very difficult chart. I will try to look them. Let me see what there is. Matic, we already look. Shiba, let's look a couple of them. Let's look at GRT and also Shiba. GRT is a very, very strange chart, I would say. So let me look at this one. We still don't have any signs. As you can look, I was looking for this as a leading diagonal. We are still holding the lows. We didn't go below this one. And actually, we have, I think, outlined this level. So this, to become valid on any bullishness, there is a very simple trick. You can push here and make type of a parallel channel, and any move above it will potentially increase probability that from here we can develop something more bullish, which is more sustainable. This might also materialize as a three wave and then a pullback to the downside. So in this situation, it's very crucial first that we develop some type of an impulsive structure here and then continue further above this channel. If this doesn't happen, this might actually turn into some type of a triangle with a further move lower. We have reached some of the levels we have looked before, 786 retracement levels. So we need to build up here a bullish scenario only if we see prices going higher. So as you can see in the Elliott Wave world, you need to be flexible. You always have to monitor what market does and be ready to change, not married to any wave counts, and assess this macro condition and also probabilities, which you can do. You can derive from your technicals and also some additional stuff that you look. So be very nimble and also be very fluent in looking both sides and looking for some signs where your probability of a potential trade in any direction kind of materialize in a more to your favor than against you. So let's look these other requests. So let me see what do we have more. Shiba. Okay, I didn't look Shiba for a long time, I think. Shiba, let's look Shiba. Let me just find a convenient chart for Shiba. Maybe Poloniex is, I had some wave count here, but I don't think this one is appropriate. Let me find something. This one is also not, so this is something old that I looked for. Let me try here. Yeah, okay, so let's assess what is going on here. This is not the whole chart, but anyhow, we can dissect what's going on here. So from these highs, you have a relatively nice three-wave move. So there is some type of expanding leading diagonal here. Then you have a pause, which you can actually look as a potential triangle. And then you have one more move lower. Even if you label this just as a pullback in the ABC, there is a wave 1 and 2, 3, 4, and 5. So if we measure this, there are pretty nice equality here, which is something that we call a measured move. And as you can see here, we came to equality pretty nicely. Let's just align these levels here to be precise. just a touch, very close to equality. So from there, we have two solutions. Either we label this as a three-wave move and we look further lower, and that you of course need to see signs for that, or you can make a little bit more adjustments, make this as a wave 1 and 335, and you label this as a flat with a continuation higher. Okay, so what will give you a sign that this wants to go on the upside? Of course, you need to look on a smaller time frame, and you can look very easily for a 5-wave move challenging this previous swing high, small pullback in 3 waves, and then you can control your risk here pretty nicely with a very small risk exposure. With increased probability, this will go higher. So this is usually signs that you're going to look for when you have something like this in front of you. Obviously, as you can see, this is just a 3-wave move. With the possibility now increasing, we go and continue lower. But as you can see, we are holding these support levels, and in times of decision that you want to be long or short, this is the time most likely I will not decide until I see what the markets has in mind. Okay. Okay, guys. So I think this pretty nicely paints our outlook. I will say that also macro conditions are relatively very challenging for any bullish outlook for now. I'm still not changing my overall outlook, as you can see on my charts. But in general, I would like to see these rates in next months start to move lower and actually materialize this outlook that in some point of time this will make some sizable correction, which will allow the risk assets classes to go further on the upside. Some of the things also which keeps me on that side is proximity of this dollar index, very sizable resistance levels. Of course, any penetration on the upside will be pretty devastating, either for the, I will say, US exporting companies, and also in this situation in the EEM countries. Even intervention from the central bank, I will not exclude in some of these levels if we reach 120. But in my opinion, there is a very, very strong resistance in this zone from 112 to 114, which I think is going to materialize to a dollar starting to reverse lower. Of course, other central banks are also raising rates. US has the propensity and solid economy that they can do that, but I don't think that propensity is much higher in some other economies in the world. But nevertheless, I think this interest rate differential is also fueled by the Japan yield curve control, and people are flocking in this dollar yen, and the dollar yen is still moving on the upside. If we look this chart of dollar yen, we are seeing some of the levels pretty sizably on the upside. So I'm also paying attention on that, looking what is going on, and potentially when this potential move on the upside might actually complete, that the dollar maybe starts to make some breather, or this is a 20% move, which is incredible in the FX in a very small period of time. And that is all because of the difference and the yield curve control at 0.25. So the interest rate differential is pretty clear why the dollar is going higher. So I'm going to leave you with that. See you on the next Crypto Lab. In the meantime, if you want to look for some guidance, reasonable guidance in the crypto world, you can visit us at Trading Analysis. We have an extensive crypto coverage with our members, and also every Wednesday you can go around on our channel and look Todd, Bennett, and Terry giving their opinion in regards of also macro thesis, and I'm also involved there, and their view on stock markets and where potential lows might be expected. So I also advise you to look that if you didn't look that yesterday. So click the like button as usual, help us for this content to be more visible. Thank you for being with us, and guys, see you next week, guys. Stay well. This is a very challenging times. Pick your trades. Look for the confirmations. This is not time also to be brave. And markets going back and forth with all of this inflation craze. And take care of yourself as much as you can to stay alive in this market. So thank you very much, and see you guys next time. Bye bye.